Hello and welcome to another episode of Connecting the Dollars. Today we are going to discuss market risk and a specific type of market risk, which is concentration risk. My name is Emily Agosto. I'm a CPA and financial advisor with Propel Financial Advisors.
I'm Amanda Vaught, attorney and financial advisor.
So, concentration risk. What is it? What are we exactly looking at when we talk about that specific type of market risk?
Yeah, concentration risk often comes up with our clients who have RSUs or stock options through their work, and they'll build up a position in one specific stock that becomes like an overweight. Um, that's typically where we see concentration risk. And the reason this is an issue is that if the stock is doing well, that's great. But the downside can be rough if and when it comes. So concentration means you'll have a bigger upside and also a bigger downside. Um,
Right.
Typically, right, what we want in portfolios is diversification to minimize this risk.
Right. So, a lot of strategies in investing to minimize your risk overall is to invest in index funds that are inherently supposed to be diversified. But lately, since the S&P 500 and the other indexes that are escaping my mind right now,
Yeah, like the Nasdaq. Yeah.
exactly, they want to take like large cap especially are very concentrated in AI and tech companies. So if you could go into a little bit more of why that could lead to more concentration risk, even though you're trying to be diversified by using an index fund.
Yeah. So we're recording this in September of 2025, right? And so this has been an issue that's kind of been, percolating in the market for a while, but recently it has really gotten more and more of an issue. And that is, like Emily said, the concentration of tech stocks in the S&P 500 and the Nasdaq. So I just want to share um, some information so you can see the numbers. So here you can see a chart of the 2025 Magnificent Seven performance year to date. So here we have the Magnificent Seven stocks. NVIDIA is the one we always hear about in the news, right? Meta, Alphabet, Microsoft. This shows their performance year to date. Then we have the Nasdaq's performance, the S&P 500s, and then three more stocks in the Magnificent Seven, Amazon, Tesla, and Apple, who year to date have been underperforming the S&P 500 and the Nasdaq. And then these four have been outperforming.
Right.
And so these are the Magnificent Seven. The reason these are the Magnificent Seven is because these are some of the largest companies in the United States, and they dominate the stock market just because of their size. And by the stock market, I mean the S&P 500 or the Nasdaq, which are what is called cap-weighted index, meaning that bigger companies take up more of the index. It's not because they are better performers or worse performers, it's merely because of their size. Um, and so we can see here in the S&P 500, NVIDIA is the largest company currently. Um, that's why its contribution rank is so high in this chart, but its performance ranking is 58, meaning in the S&P 500, it's the 58th best performer in the index. So there are 57 other companies that are outperforming NVIDIA year to date, right? These is just this one time period.
Mhm.
And so you can see looking at the other companies, Meta, Alphabet, Microsoft, who have been outperforming the broader S&P 500 year to date. None of these are in, the top performers category, but they are all in the top contributors category, right? Because they're all these giant companies in the United States. So they have this outsized contribution to the performance of the S&P 500. You can see here in the Nasdaq, they're even lower down the list. I mean, there's 630 companies outperforming NVIDIA year to date in the Nasdaq. Um, but these are the companies really driving the performance. So that's the concentration that we're talking about in the current index, S&P 500 Nasdaq.
Yeah. And for those who are listening, we will link this in our show notes. We will also link this on our in our YouTube in the show notes there. Speaking of YouTube, if you would like to follow us there, please subscribe. It really helps us get this information out to people. I find this very interesting. I know I'm in this industry, but to actually look at these, it's very easy to understand this chart. NVIDIA, its performance 58, but its contribution rank 1. So that just means it's a bigger, the contribution to the increase currently right now, it's increasing,
Yes,
is
increasing.
due to NVIDIA. But looking at the flip side, if NVIDIA goes down, it's going to also most likely be the number one contribution to the downside. So there are the 57 companies that are performing better than NVIDIA are just not as large.
Right, exactly. And so that's the thing with concentration risk. On the upside, it's great. You are getting kind of that juice in your portfolio if the company's doing well. But as soon as it does poorly, it's really going to have an outsized contribution to bringing your portfolio down. And then, so I think in the current moment, we're not making an investment recommendation. We're not saying sell NVIDIA, buy NVIDIA. I think it's important to educate people because there's a lot of generic recommendations out there saying buy an index. And one of the reasons that a lot of people say that is because it's an easy way to get diversification in your portfolio. And so right now, that benefit of an index is not necessarily there. And so we stress with our clients, you don't have to buy an index. And sometimes it's the right choice for people, and sometimes it's not. And this is one of the risks that we want to take into consideration. The other point I wanted to make about this is that, there have been other times in our history where the stock market has become this concentrated. And it's been fine. And we don't know the future. This could be fine. I mean, this is just a risk. It's not something that's necessarily going to go negative. But in this instance, we have the top contributors to the index that are all like AI plays. So it's not just a handful of companies that are concentrated. They're all concentrated in one sector and mostly because of the AI thing. So if, AI goes south or it becomes, less exciting or there's less money in it, it's a bigger risk.
Right.
So,
And yeah, going to kind of wrap this up, again, I think that this chart is super helpful because, but also keep in mind it is a snapshot in time. So if you
yeah,
look at this and you're like, oh my gosh, I have a lot of investment in this S&P 500 index, and these contribution ranks you're like, okay, this is just making me nervous. Go back to what your goal is. Like, are you taking money out in 5 years? Are you taking money out in 10 years? Are you investing for a long-term horizon? I mean, for a lot of people we work with, you're investing for the long term, 10 plus years. So just by understanding this is just another way to think about the market and talk to your advisor about what is best for you. it's not necessarily something to freak out about or worry or concern yourself, like not be able to sleep at night. But it's just an interesting way to look at things. You think your portfolio might be very diversified, but it's actually not, or the opposite. Like you think you're diversified, that's what I just said, or you think you're very low risk, and then you look at your concentrations and it shows a different picture. So, kind of the
Yeah.
same thing we always say is keep your personal goals at the top of your list. That's what really matters. But I do think this is important for people to understand and maybe start a conversation about, some other options with your investment advisor.
Yeah, I think that's really well said, Emily. Um, and this is our job, right, as financial advisors to consider these risks, and then how do we position our clients for the long term, considering these risks, and how do we hedge against them going forward. So, if you
Yep.
have any questions, we love talking about this stuff. So, just please reach out and let us know.
Yep, we'll put all of our contact info in the show notes and hope you enjoyed this one. Like we said, give us a thumbs up if you liked it and comment if you will, if you have any questions. We'll talk to you soon.